You guys are sitting on a lot of Bitcoin right now. I think you've almost got 100,000. I think you got like 93,000, about 225 more, or somewhere around there here recently. Like I think it was yesterday or today. What are you guys doing with that? I want to cover that.
Okay, so to give you the exact number, we have 91,326.
Almost 92,000. I don't want to put the horse in front of the cart here. Okay. But the question is, I want to go two different places with this. Number one, what are you doing with that Bitcoin? Is it just sitting with a custodian somewhere? I'm not going to ask you for your private key.
We're hodling it, in a nice, safe place.
The question is, if you guys are sitting on 91,000 Bitcoin and there's all kinds of ways out there for you guys to like stake that Bitcoin or earn returns on that Bitcoin with a place like BlockFi or Celsius or some other third party, is that something you guys are interested in doing at all? Or are you guys just saying like, we don't care about those extra returns? Because that seems kind of counterintuitive to your investors.
Okay, well, first of all, Bitcoin's been appreciating against the dollar at 200% a year for the past decade. Okay, this year it's faster. Right. I mean, this year it kind of accelerated to like 400% if you discount the Black Thursday, whatever, which which is even faster, but it accelerated. So more than 200%. You're buying the thing, it's appreciating 200% tax free with no counterparty risk. If you were to offer me 8% interest to loan it out or to trade, if you offered me 12% interest to trade the futures, I'm going to end up incurring a 35% tax rate on that, some number. So your 12% yield becomes 8% yield. And I go from 200% to 208%. I mean, it sounds like a lot if you're thinking about it versus zero, but it's really 8% on top of 400 and on top of 500% this year. So really it's like 1% after tax, maybe 2% after tax more. If you look at the counterparty risk, it's huge. We could lose it all. If you look at the security risk, you have to move the stuff around through different custodians. It's a security risk. If you look at the accounting challenges we're a public company. We'd have to establish ourselves that we're comfortable with the controls and the disclosures and the annual reports of the counterparties we do business with. And then we had to figure out how to disclose that risk and quantify that risk to our shareholders. So by the time you get done with the accounting, the lawyering, the execution, the paying of the taxes, the deciding how to execute it, you realize that you made the business 10 times more complicated, 100 times as risky to make 1% more money.
So that's on one side. Like, what are you guys doing with it in terms of staking? Sounds like it's just not worth it to you guys right now. I get that. Let's go on the other side. You said you're just hodling it. So there's a narrative out there that all of the big corporations and all the institutions, the big investment funds, they're buying Bitcoin right now and they are not going to sell it. And that's going to make us not go into the same kind of bear market that we've seen in the past. Is that your strategy? Is no matter what, like even just taking into consideration, there is going to be a bear market and you guys are just going to hodl through it and not care if the price goes down, 85% again?
Just a basic set of principles. First of all, Bitcoin is the apex property of the human race. There is no property invented in the history of mankind that is better than Bitcoin. Not land, not gold, not silver, not stocks, not bonds, not the giant stone coin of the Yap people, not NFTs, not art, not baseball cards, nothing. Okay. So it's the apex, it's property. It's also the longest duration asset. That means there's no reason you can't hold it for 100 years.
Yeah.
It's better than owning all of Manhattan. It's better than owning, the center city blocks of the greatest cities in the world. This is like Manhattan in cyberspace. One day 1 billion people will live there, then one day 5 billion people will live there. So I'm telling you, 5 billion people are going to want to own property in cyberspace. There's only 21 city blocks. How long are they going to want to own that property? How about like 1,000 freaking years?
Yeah.
Right. Like there's no reason why the property isn't good for 1,000 years. It's an open software protocol that's only going to get better over time. The English language has been around for quite a while, right? How about Arabic numbers? Been around for quite a while. A protocol can last a long, long time. So we've got this issue of, is it long duration? Yes. Is it high quality? Yes. When should you ever sell an asset? The theoretic, and this is why people like the models are all just misleading people to make awful dilutive decisions, destroying their wealth. The only time you should sell an asset is when you have knowledge it's going to be impaired, right? You can't take it with you. It's going to be impaired and you can't finance it to buy the next asset. Well, this is not going to be impaired. This is property in cyberspace, right? And there's nothing better to buy. There's nothing better to buy, right? I mean, I'll say it a third time. There's nothing better to buy. So if you're buying something which is potentially going to last hundreds of years and there's nothing better on earth to buy, why would you ever sell it? Yeah. So that's the first point. You're trading it for what? Trading it back for, you're trading a strong asset for a weak asset. In nature, there's a flow from the energy flows from the weak to the strong, right? Water flows downhill, energy flows from the weak to the strong. In free markets, capital flows from the weak asset to the strong asset. In currency markets, it flows from the weak currency to the strong currency. So it doesn't really make sense to trade out of that ever. Let me make one more point. All those models, they're irrelevant. As I say, they're irrelevant. All the, like the 4 you're having, irrelevant. All your back tested models for the past decade, irrelevant. They're all based on history. Okay. They could only be relevant if there were no external actors or external energy sources. When Godzilla comes to the playground, your models of who's going to win the pinball tournament are irrelevant. You could tell me, I've been at this pinball tournament for the past decade, and I know that always like the two dudes on the left side of the table win because there's a tilt in the table. When Godzilla blasts your pinball table, it's irrelevant. So the halving, what does that mean? It means nothing because all these miners are coming public. And as they come public, they're going to have access to infinite, cheap, or free capital. They're not going to sell any Bitcoin. They're going to buy the Bitcoin. Stock to flow is going to infinity. Then stock to flow is going negative, right? When all the exchanges and all the miners of Bitcoin are public, there's no reason why they couldn't issue billions and tens of billions of dollars of equity and debt and buy Bitcoin. Well, why would you buy Bitcoin? Well, my investors want the Bitcoin. Well, what if the investors don't want the Bitcoin? What if the investors hate Bitcoin? Well, if investors hate Bitcoin, they're not investing in publicly traded Bitcoin miners, are they now? Right? Nobody's investing in a publicly traded Bitcoin exchange or publicly traded Bitcoin miner or a publicly traded Bitcoin company if they hate Bitcoin. So as the shareholders rotate, what you realize is there's no rational reason for anybody that ever earns Bitcoin or trades Bitcoin to ever sell the Bitcoin, which means that the stock to flow doesn't matter, which means the halving doesn't matter. What matters? What matters is when someone shows up with $20 billion and they want to buy Bitcoin, that matters. What happens, you know, if Tesla buys 10 billion in Bitcoin instead of 1 billion or 1.5 billion? That matters. Is that in your model? No, it's not in the model because no one ever did it before this year, right? So you couldn't have it in your model. So that's why I think the models are only interesting in a closed adiabatic system with no new actors, with no new developments. But there's a pretty big development here. It's $400 trillion worth of monetary energy sitting in weaker assets.
Yeah.
And so another way to say it is 400 trillion gallons of water that are in a reservoir uphill from you. And if I poke a hole in the dam, that 400 trillion gallons of water is going to want to flow downhill. And when that flows downhill, it's going to wash out your hedges, your playgrounds, your cities, every beautiful structure you've built, your sculpture, your artwork, your ports, your fleets. Everything is going to get negated by the 400 trillion gallons of water flowing downhill. And so you really got to keep your eye on the dam and figure out at what rate is the monetary energy in the rest of the universe entering Bitcoin, because that is going to dictate everything much more so than any model. So hopefully that answers your question, right? Like, no, we're not selling it. We're not trading it. It's like, it's a very simple idea. Wait for the water to flow downhill. And by the way, stay kind of out of the way of the water. You want to make money on this, set up a little turbine, and as the water flows downhill, turn the turbine and you can extract some hydroelectric power off
Yeah.
of the water flowing downhill.